A number of factors came together to contribute to the 1929 economic collapse, the most significant of which were a rise in consumer debt, an overheated stock market, and a lack of regulation. These three elements played a crucial role in the economy's collapse. Several banks failed as a result of the market crash, which also caused extremely high unemployment rates and a sharp decline in consumer expenditure. These elements all played a role in the Great Depression. In addition, a significant increase in the number of unemployed persons was brought on by the crash. When the stock market crashed in 1929, the economy experienced one of the worst downturns ever seen. The stock market in the 1920s had reached a dangerous degree of speculation and market manipulation, which resulted to a surge in stock valuations that was unsustainable. This is only one of many variables that led to the collision's immensely destructive effects on everyone involved. The market had heated up beyond control. This led to the creation of a bubble, which eventually burst and ultimately brought about the 1929 crisis. A number of various causes, including lack of regulatory regulations, contributed to the 1929 financial crisis. Due to the 1920 stock market utter lack of regulation, there was a great deal of speculation and market manipulation, and no one was in charge of managing the market. It grew too hot and eventually collapsed. Unpredictability in the global financial markets as a result of how underdeveloped the financial system was in the 20s compared to now. Several financial institutions failed as a result of the Great Depression. People found it increasingly challenging to access their savings due to the instability of the banking system, which was another factor in the economic collapse. This was yet another foe that contributed to the financial crisis. The Great Depression had a global impact and affected nations in every continent. It was an economic calamity. A protracted period of economic recession was what made it distinctive. The global economy at the time was interconnected, which helped the crisis grow as originally unaffected nations gradually were affected by the slump. This occurred as a result of the economic collapse eventually dragging down initially untouched nations. This happened as a result of the economic crisis ultimately bringing down countries that were initially immune to its impact. The Great Depression lasted for more than 10 years, exceeding the 10-year mark, and it took the economy a long time to fully recover from the effects of the crisis after it had gone. The long-lasting severity of the economic collapse had a significant influence on society and was a factor on the widespread poverty, unemployment, and social unrest. The Great Depression at the time was one of the worst economic catastrophes in history, and the effects of the 1929 crash persisted for a number of years after the occurrence. The combination of a number of diverse circumstances led to this outcome. Given the changes to the global economy and financial systems that have taken place since the 1930s, it's probable that the potential causes and consequences of a future crisis may differ. Furthermore, it's feasible that additional factors could contribute to a crash in the future. For instance, the degree to which government intervention, rising globalization, and technological innovation all affect the economy and could have a significant role on how a future economic crisis is resolved. Because he is such a well-known and successful investor and billionaire in general, people pay great attention to and place high value on the insights that Warren Buffett has supplied regarding the economy and the stock market. Buffett is a renowned investor and a long-term investor, an approach that he promotes and the emphasis he places on investing in companies with strong fundamentals and a competitive edge. Also, he places a lot of emphasis on investing in companies that have been in operation for a while. However, he has made a strong case for avoiding market timing and can endure market volatility. He has been campaigning for this for a while now. Buffett's been warning investors about the risks of partaking in market speculation and emphasized the importance of avoiding overexcited behavior. He has also underlined the value of refraining from unrestrained excitement. Additionally, he has been quite vocal about the necessity of the financial sector's regulation to stop market manipulation and protect private investors. The 1929 stock market crash was a crucial turning point in history, and its ramifications persisted for a long time after it took place in the 1930s. In the end, this contributed to the emergence of the Great Depression. Due to a number of variables that contributed to its severity, the economic collapse that took place in 1929 was noticeably more severe than any economic collapse that may occur in the future. The COVID-19 pandemic has had a significant influence on the global economy, leading to widespread job losses, decreased consumer spending, and disruptions to supply networks that are spread throughout many different regions of the globe. The global economy has become increasingly interconnected, making it more susceptible to economic shocks like those brought on by natural disasters, trade disputes, and geopolitical concerns. This makes the world economy more vulnerable to shocks to the system. Globally, there's been a general trend towards widening income gaps, which could have a negative impact on consumer spending and slow down economic growth. Globalization is one factor that could be behind this development. Market volatility may increase as a result of political unpredictability in some nations, and investing and spending may become more cautious. These two outcomes have an impact on the economy. Hurricanes, earthquakes, and droughts are just a few examples of how natural catastrophes can limit economic activity and cause significant financial losses. This is true since natural forces or produce natural disasters. It may be difficult for the government in some nations, especially those with high amounts of public debt, to respond to economic crises and provide assistance to businesses and workers. This is particularly true in countries with high levels of debt. International supply chains might be disrupted and economic activity can slow down as a result of the escalation of trade conflicts between states. How do you feel?